Hey, greetings traders. You can see I want to talk about GameStop, and there's a really good reason for it. I have been very much focused on this stock since early, in fact, August 10th, when it was $4.36, and it is printing. It hit a high of $2.49 after hours. So I want to talk about that. I'm going to leave this in the background. It is currently 6 o'clock on a Tuesday evening. And I just, in fact, finished a macro to micro power hour with Jonathan Gibbons of VigTech.io, which we normally come together and talk on a Tuesday. The focus of that particular discussion was parabolas that result in trapped longs. So now let me share with you some thoughts, if you will, because I am very focused on the warning aspect of this now, not the profit, but keeping the profit. So let me explain a little bit. In short, this is a theme, GameStop, if you will, as a parabola. And I want to kind of go back before I can go forward, but where we came from, how we got here, if you will, and a warning. So let me share with you some thoughts that I have presented to clients. And this is first and foremost a stock that I recommended back in August, as I mentioned, to clients of LaDuc Trading. It was a high conviction trade. I believed it was going to be what I called my 4 to 40 stock by end of year. It actually tagged $40 on January 14th. All right, so let's talk about how we got here. I have continued to recommend this stock even after it tagged $40, given sentiment and structure. And I continued to talk about it in my live trading room, also set it up with levels in my client Slack workspace. I saw it bullish basically to $60, and that was at least. I had referenced this $60 call also in a YouTube video that I did beginning of last week. Actually, last Sunday. It was Martin Luther King weekend, and I put together this particular market call as a free video saying thank you very much to clients who had given me feedback. One in particular had become a millionaire, and I know others were long and strong, but I thought that this was going higher. This was before the short interest, if you will, sentiment started to, get tons and tons of attention. But basically every day I have gone through with clients my continued analysis as bullish and price targets. And tonight, this is obviously tagged 249, which is not even reflected in my track price, which at 148 was 3,300% on stock option basis. So here's the bear case that was entering this particular play and why so many were still bearish, including Citron, Andrew Left, who famously came in at $40 and said it was going to 20. And that's when I did my video going, it has a better chance of going to 60 before 20. The bear case is very simply over 5,000 stores in malls selling video games, which you can get online, and in malls that are lightly visited since COVID outbreak. You add to that their reported net income of $408 million on revenue back in 2012. In the last 12 months, they had a net loss of $275 million on 40% less revenue, $5.2 billion versus $9.5 billion. So not a good fundamental case. The stock had traded as high as $62.11 back in 2007 and got as low as $3.50 back in March of last year, right before I saw it basing in a beautiful inverse head and shoulders pattern on a weekly and monthly, and recommended it to clients at $4.36, saying it's way overdone and a laggard, if you will, in the video game space. Obviously, after sizing up the ATVI and the EA and the TTWO and the other gaming stocks that had been propelled very strongly higher in lieu of the work from home, stay vacation, and basically can't go anywhere type of e-commerce sales in the gaming space, online gaming, and gambling both. They have just been solid trade and trend ideas. But the bull case came charging forward when Ryan Cohen, the former CEO of Chewy, the pet supply online retailer, took an activist role equal to about 12.9% of the stock, believing that GameStop could make a turnaround. On January 11th, GameStop announced that Cohen and two of his friends from Chewy would be joining GameStop's board. So it had been bad, but now it was becoming a good idea. It was a money-losing mall retailer in a dying business during a pandemic, and it traded like it. But now that it was having a dynamic e-commerce team come into the play and a celebrity CEO, the enthusiasm around this name rapidly growing, the gaming segment online, should result in pulling forward earnings growth, and it started to trade like it. So then the flows started to follow, meaning this past weekend, the Friday, if you will, it triggered a close of $65. And in my trading room, it had opened basically very bullish. And I said, okay, if it slices through $50, it's going to be a world of pain for shorts. On that particular Friday, the highest option strike was $60. And in my room, I mentioned, that's it. It's going there. It actually went through that. It sliced through it. Let's see. It opened. I'm trying to find it again. 79. So 76.79 before it came back down. So basically, it got the gamma, if you will, squeeze, couldn't get much energy above that 60 level. That was the highest strike. And so sure enough, it overshot and $76, then came back down and settled at 65. I had posted a chart for clients that I saw this going to 91.80 would be the next price target. On Monday, it shot through 91.80 and tagged 147, which was my outside outlier price target. It's a fib extension on a weekly and a monthly, and I share those with clients. For Monday alone, almost 178 million shares were traded, worth almost $17 billion. Friday, the number was even higher at 194 million shares, over 12 times its trading average volume. So between Friday and Monday alone, not including today, Tuesday, 372 million shares of GameStop were traded. The float is 47 million. So we haven't even talked about the short interest yet. We'll get there. So you can see that obviously the speculation was running wild. Now let's talk about shorts. And the flows obviously were before the pros even, could get a chance to get out. The market was being driven by flow of capital rather than fundamental. Shorts were clearly in a world of pain. We didn't know how much yet. And in fact, that morning I had written Tuesday morning, something had blown out. I bet a firm had blown out. And sure enough, we found out later there was a really big one, major hedge fund by the name of Melvin. But first and foremost, Citron Research, Andrew Left had said he was very bearish when it was 40, issued a $20 price target. He's still short. GameStop short interest was about 139% of available shares after last Thursday. So I don't have that updated number. That'll come out tomorrow on Wednesday. But basically, despite that 139% of available short interest, if you will, the stock continued to surge 162% in 2 days alone. We're talking Friday and Monday. That's a stock borrow fee. At the time I grabbed this information on Monday, the stock borrow fee was 23.6%. And margin calls were clearly coming in to force short sellers to buy back in. Citadel and Point72, which the Steve Cohen hedge fund, were bailing out the Melvin GME short to the tune of $2.6 billion. They were taking revenue. This was an announcement that came in about 3 o'clock, January 25th, Monday, and I retweeted that. So as of Monday morning, mark-to-market losses, this is before the hedge fund tweet and press release that, they were investing 2.75 billion to help make up for Melvin Capital being down nearly 30%. So this mark-to-market losses for shorts equaled $6 billion year to date, as estimated from S3 Partners. They are a financial analytics firm that specializes in short interest. So I'm grabbing all this stuff, by the way, from readily available, credible resources, from Bloomberg to S3 Partners. These are real things that have transpired in the soap opera of GameStop the past few days. It is a drama. And then today, Tuesday, despite this elevated pricing, 147's been tagged. This morning, again, in my trading room, I'm like, as long as it stays above 76, it can go back to 147. Guess what? The Wall Street bets, the subreddit chat, they're still holding long and encouraging long trades, as if to punish the hedge funds, to punish the elite Wall Street, if you will. So, one trader claiming to have, gone from $53,000 to a $13.5 million win. He hasn't closed it yet. So anyway, the point is there is a great deal of flow that is short interest. We've talked about that, 136%. We'll find out tomorrow, new numbers, as well as this gamma squeeze, which I'm going to talk about next. But there's just no lack of piling on. So whether it be the Twitter and Reddit bets, or Chamath, a celebrity CEO, a billionaire who is very well known for his SPACs, the special purpose asset corporations that he has formed, blank check companies to basically take private companies public and invest in those companies. So he's already, very successful, multi-billionaire. He comes out today and says he's a buyer of GameStop, the February $115 calls. The $200 calls are being added for strikes. Now, keep in mind, the highest strike on Friday was a $60 call. So how many standard deviations, is this thing going to move before it breaks? On Friday, it was a 15 standard deviation move. Monday, well, I can't even. Tuesday, it did it again. So it's doubled again. So we've gone from, 65 close on Friday to, we've gone from $65 close on Friday, which is right here and really darn hard to see, to a high of 147. That was my price target. It was actually a high of 159. It came down. We're going to talk about that in a minute. And then today it went right straight through 147, although that is exactly where it closed, which is, by the way, bullish. And it tagged 249 after hours. Next price target was 237.50. So you can see this is a standard deviation move that is a once in a lifetime kind of activity. So here's what I wanted to talk about in regards to why we have these short squeezes underway in lots of highly shorted plays like BlackBerry and Bed Bath & Beyond and others. Oh my, I've had a fun time recommending them to clients in my live trading room and in my Slack workspace for clients, but none of them will be this GameStop equivalent, no question. But this is now getting into a territory of be careful. And here I'm coming into a warning very quickly with GameStop hitting this high, if you will, of the beyond, let's see, 423.6 fib retracement on a monthly. Yeah, the opportunity now for profit taking is necessarily my concern, because there are more folks that are still talking about this going higher. It's more about the liquidity function. This whole concept that Jonathan and I talked about earlier today, where parabolas, which this clearly is, equals trapped buyers. So for example, yesterday, between 10:45 and 11:15, GameStop fell from $159 to 88 with 4 trading halts along the way. That is a 63% haircut in very short order and no way to get out. So that's just a bidless market. Now, granted, it did calm down again and then it launched again Tuesday. Again, today was another freak of nature type of trading day for GameStop. But I'm just telling you that this is going to break. So I'm watching for signs of a situation where this, not the buyers are wanting to stop, because they clearly aren't. It becomes a bidless market. This market maker structure under the surface means that for every call that is bought, there's a call seller that will likely have to hedge the exposure risk by buying stock. Well, at some point, they're going to give up. This is a margin call waiting to happen. This, for me, is one reason why I am doing this video. And I wrote a post that I have put on my website. And the title of the post is GameStop Has No Stops, meaning we have already seen yesterday what happened when GameStop triggered those. Actually, it had 9 trading halts on Monday, but in particular, that one that fell from 159 to 88, that was a moment where I saw in volatility complex this tremor that was happening. And it was actually becoming a liquidity issue where I worried that they would have to start selling off stuff that matters to cover margin calls in this GameStop short. And hedge funds, definitely long short hedge funds, have been hurt by this. The whole covering, if you will, of an unwinding of their shorts that had been very profitable. But now that we have this growth to value rotation, and in particular this gamma squeeze, this is creating a very, very small door. So the client posts that I have sent out have been bullish. 240 bullish, 260 bullish, 291.80 bullish, 147, and now tonight it hit the next and highest fib level I have of any comfort, which is 237.50. So I saw what happened intraday when it was halted. I saw liquidity basically just get dried up, and I wrote my concern to clients, which was, this was my comment on Monday to clients, okay, at 10:30 in the morning. That was right between when GameStop had literally fallen just before GameStop topped out and fell 63%. I wrote, okay, my bet the factor rotation out of highly shorted hedge fund names is blowing up some big and small hedge funds. This was before GameStop dropped, okay, and before we learned that Melvin had to be bailed out. I then, continued writing, okay, I don't even know what to suggest for trailing stops, because, this is really highly volatile. And I talked about that in my trading room. But my bigger question was liquidity and my concern. And I wrote it very specifically to say liquidity matters. And right now I see the names running the most, sucking in the liquidity of names that matter the most. Please be careful and watch my VIX chart, which is oh so dangerous right now that I just don't feel right about issuing a flash crash warning potential if VIX triggers 27, then 31. So right now, what does volatility have to do with GameStop? Well, again, this is my intermarket analysis read. This is my concerns, if you will, for liquidity. And I'm not even talking about a higher dollar or the Fed meeting tomorrow, both of which could cause a hitch in the giddy long here. But I'm talking specifically about GameStop. So in this particular case, this move of after hours rebalancing is what has me most interested right now. And by that, I mean, if you recall, there was, and if you listen to the talk that Jonathan and I just gave, it was really good. And unfortunately, I lost power, so I couldn't finish it up, but we had an hour into it talking about parabolas and the market structure. And then at the same time in the background, I'm looking at GameStop, moving higher very rapidly. It's a rebalancing act. So to clients, I say, take care. Okay. And I wrote that post with a warning, and I'm doing this video publicly with this warning that yes, market structure is such where this can go to infinity and beyond, I guess. I don't trust it now. And here's why. February 5th, 2018, we had a very unprecedented event called Volmageddon. This particular ETN called XIV was a vol suppression vehicle. And I had actually, at the time, this was, my thing, trading volatility, had seen something about ready to break. It actually broke after hours between 4 and 4:15 thereabouts. It started to trigger the rebalancing. And what that meant was the shorts were taken out in body bags, those who had been shorting volatility, because the next morning it opened up down 90%. So I'm not saying that's going to happen to GameStop, but there is a rising risk of an air pocket lower, and it is something to seriously consider if you are long and strong, especially my clients from much lower levels, whether it be 4 or 40, I don't care. This 240 is highly suspect, and I would say it would not surprise me if we have an air pocket one of these days and it doesn't get up. It doesn't recover. So take care. I hope it helps. I hope this little trip down memory lane, both for clients and those who want to become clients, helps understanding the market structure, the fundamental, the macro backdrop, the optionality of this. It is clearly a fabulous trade if you have been long. Just take care. You don't want to be wrong. Have a